Okay guys, welcome to the next video. This video is going to explain market structure in a bit more detail using the arrow and just some simplicity to show you how to look past the candlestick noise and actually identify the overall market structure. So typically the market flows like, let's just draw the perfect market structure. We have this, we have this, up, down, and more, up. Right, so I did go through this in a previous video, but I just thought it's important to show you how not to get faked out with proper market structure. So these levels over here are higher low points. Right, so that's your higher low. It's your higher low. Okay. And these points are your higher high points. Alright, cool. So this thing, when that happens, and remember this is based off the time frame that you're trading on, whether it's a daily, weekly, monthly, 4-hourly. This is based on the time frame that you're on. So over here you would have lower low. And as I teach, you guys know after the lower low is formed, you will then head for the lower high. Right? To confirm break of structure. And you will get more lower lows. So we have another lower low. And then over here we have what you call a lower high. Okay, so there's your lower high. So this area over here is a trend line. This here is called make it red, make it big. This is a break of structure, guys. When the market comes down after making consecutive higher lows, higher highs, all of a sudden forms a lower low. That's a break of structure. And then we have the confirmed break of structure when the lower high is now formed, giving us an entry point. So let's say we used our fibs over here. Let's just say the A to B. It would then be a 38.2 reversal and a break of structure. So just more confidence to go short. So now let's draw a not so convenient market structure, something that might throw your eye out. Let's just delete all of this quickly. Cool. So let's say this is what's happening. Something like that. Okay, so now it looks a bit more confusing. So let me show you how you guys can always stay in tune with what's happening and never get faked out. So this over here is our yellow. Make it black. So this is our yellow. That's our yellow. It's our yellow. Our yellow. Our yellow. And the top might confuse you because you see a high high, and then all of a sudden you see a low high, and then you think structure is broken. And then you have another low high, and then all of a sudden you have a high high, and then you have another low high, and then a higher high again, right? So now your structure is still bullish because structure was not broken at all. If you look at the trend, it was making higher lows, higher lows, higher lows. Structure needs to be broken at the bottom as well. I can show you another variation of this, and it goes something like this. So we have the higher high, we then have lower high, lower high, lower high, and then all of a sudden that happens. So over here, this level, all of that, delete this. So if I take this, this was a higher high. Let's use this one. So it's a higher high, and then a bunch of lower highs, which probably confused you or threw you off because you thought that structure was about to change, and then all of a sudden this happens, which you weren't expecting. So how you guys will never get thrown out to this is that this over here is a higher low, right? That's a higher low. And then all of these other valleys that are exactly the same height as the first higher low, they're basically called lows. Delete that. So these are all called lows. Lows, lows. The only time structure is broken, guys, is if this happened. That followed by that. So now this would be considered a lower low. Understand? So this is a break of structure. After the market has made a higher high, a higher low, and then suddenly a lower low forms, because now we're anticipating a lower high, which will also be a ABC valid reversal zone. But this is just to fake you out, guys. It's to throw you off the track of what you're actually watching. But if you look at it overall, it never went lower than the first higher low. Now, guys, it's so important. If you follow market structure like this, you won't get faked out, especially if you're sticking to one time frame that you're analyzing on. Okay, now this applies the same way if the market was moving the other way. Now, this is examples of the market making higher highs, higher lows, but the exact same thing applies if the market was going from a high, right, to a lower low, and then making, something like this. Like that, and then going up and coming down on this level. So, oops. So this would then be, what am I doing here? Sorry, guys. So this would be a lower high, a lower high, a high high. This would be a lower low, followed by more lows. Right? And then you think high high, okay, we're about to go long, and then all of a sudden the market just carries on falling. Because overall structure hasn't been broken. Right? It hasn't been broken. You need that higher low or the higher high to fall. So guys, I hope this video helps you with structure, because I don't know how to put it any simpler than this, but always keep your eye on the higher highs and higher lows. So the market can make higher highs, higher lows, and then it can make lower highs and lows and still maintain the bullish trend. Okay, it's when market is broken with a lower low, that is break of structure, confirmed by a lower high, where we now get and measure our ABCD reversal pattern. So guys, I hope that makes sense to you, and I'll see you on the following video.